Hello and welcome. You tune into ET Now's Rush Hour. We are celebrating 16 years of ET Now and soaring. And with that, let's begin the show with the top headline that Accenture has reported its quarter 3 FY25 numbers, and Accenture shares have fallen in early trade despite good show on the earnings front. Revenue for the third quarter has come in higher than analyst expectations. The IT major has also raised the bottom and the full year target of revenue growth. However, the investors are disappointed with the total bookings for quarter 3. My colleague Rabinder is joining in with the number crunching. Take it away, Rabinder.
Well, Accenture has reported its Q3 FY25 number, and company reported revenue at $17.7 billion, marking an increase of 8% in USD dollar term and 7% in local currency. However, new bookings for the quarter stood at $19.7 billion, showing a decline of 6% in USD and 7% in local currency compared to the same quarter last year, and a booking related to GenAI total at $1.5 billion. Company saw an improvement in operating margin, which rose by 80 basis points to 16.8% in the quarter gone by, and the diluted EPS stood at $3.49, reflecting a 15% increase on a yearly basis and 12% increase over the adjusted EPS. Meanwhile, free cash flow for the quarter was reported at $3.5 billion. And if we talk about the growth outlook, then looking ahead, Q4 FY25 revenue is projected to be in the range of $17 to $17.6 billion, translating into a revenue growth of 1 to 5%. And for the full fiscal year, Accenture has given a revenue growth guidance in local currency to be 6 to 7% as earlier guidance of 5 to 7%, and they expect operating margin to be at 15.6% and expansion of 10 basis points over adjusted operating margin, and they expect diluted EPS to be in the range of $12.77 to $12.89. And commenting on the result, Accenture CEO said that the companies need resilience and result, and they laser focus on delivering measurable value for the client, which is fueling companies' growth and making a difference for them in the market. So overall a good number of the Accenture, but a new booking saw a decline.
All right, overall good set of numbers coming in for Accenture. But to weigh in on the numbers, now we're joined by Sandip Agarwal, fund manager, Sovelo Investment Managers, joining in. Hi, Mr. Agarwal. Thank you so much for joining us. Mr. Agarwal, first up, how are you reading into Accenture's numbers? Because it's an IT bellwether. Usually we use that as a benchmark of sorts when it comes to IT earnings in India as well. So first up, how are you reading into the numbers, the revenue, and the full year's guidance also has been revised from earlier 5 to 7% to now 6 to 7%, and also there is a beat coming in on the revenue front. How are you looking at the numbers?
Yeah, hi, good evening, and thanks for having me on the show. So as you rightly mentioned that, the current quarter numbers were better than estimates, but, the challenge is that there are two challenges I see. One, the bookings are substantially weak because there is a 7% decline year over year in constant currency in bookings. And also, surprisingly, even the outsourcing book is down 9% year over year. So that is one risk which I see. And second, I think, the commentary, if you read the fine print of the commentary on the call, the management has mentioned that they see more uncertainty in CY25. Now, remember, this is a company whose year end closes on 31st of August. So we are talking another 5 months where there is for which also there is no certainty. So this spoils the guidance for the next year also. So that is the reason the stock is, I think that there will be some pressure on the stock, and there will be a negative reading of this across the board, because it is not about next one quarter where there is a weakness which is expected. I think it is more to do with the weakness which is percolating down to the next year for Accenture, and also, the whole story of second half can be better for India. That also now there are question marks on that, primarily because we already have, December as a seasonally weak quarter, followed by slightly better March quarter, because there is also less number of working days in February. So I think, the question is now that whether FY26 will be bad for us, and also Accenture next year guidance could be weak.
All right, Mr. Agarwal, also like you mentioned that yes, the total bookings have been a disappointment for quarter 3, decline of 7%. How do you see this improving in the next quarter, and what are perhaps going to be the triggers for the improvement?
So honestly, right now the amount of feedback which we are getting incrementally from and the commentaries which we are reading from all the top clients of this IT service provider, it is nothing to do with the companies or nothing to do with the service provider. it is all related to the volatility and the developments which are happening in the US. People are not sure how the economy will take shape, whether there will be rate cut or not, whether there will be growth or not. So there is a lot of uncertainty even on the tariffs. So because of that, clients are not releasing their discretionary part of the budget, and I think that is the biggest challenge, because of which it is not percolating down in the confidence level of the management of the IT services companies. And I think till that clarity comes, no one can take a strong call. So worry is not about Accenture or any IT services company. Worry is about clarity coming to the client themselves from the economy side, or from the management, from the country side. So I think that is the challenge right now everyone is facing.
Mr. Agarwal, so that's the clarity is basically from perhaps the geopolitical tensions and the tariff that is weighing heavy on that. But Mr. Agarwal, since Accenture is like I mentioned at the start, it's some sort of it's a bellwether, the sort of a benchmark that sets a precedence for Indian IT companies as well, as far as their earnings are concerned. What can we make of that as far as Indian IT is concerned?
So, till last quarter, we were very optimistic because we were seeing some pressure on consultancy and this discretionary uncertainty and all. We understand because we don't have much exposure to that, but outsourcing or the managed services book was doing pretty well. This is the first time when we are seeing after long gap that there is a stress, or there is a softness in the booking of the outsourcing side, which is a sharp decline actually of 9.8% year over year. So I think that is something which is more challenging, and that definitely means that Indian IT companies will also have similar commentary of uncertainty going ahead. So I think from that perspective, and we have recently seen a lot of run up in the Indian IT stocks. So we have to marry both the facts that on one side there is the uncertainty which is coming from the IT bellwether, and on the other side the stocks have done quite well in last 2-3 months. So we have to see how investors take both the data points uh, going forward.
Mr. Agarwal, thank you so much for joining us and weighing in on Accenture's earnings and its impact perhaps on Indian IT as well.